And we are back. And we can start the evening. Thank you very much for coming into another trading night. So, welcome back all the people who have been viewing me. Sorry about the technical difficulties, I do apologize. But tonight we are looking at we are looking at tonight's discussion is risk management and how to enter trades. Alright, so that is what we are going to be discussing tonight. So I don't know who's watching, and if you're there, just say hi or just give us a wave. Alright, so with risk management, one of the most important things we need to talk about. Because if we don't talk about risk management, then what are we doing with our lives? Alright, especially in the world of trading. So here we go. We have our lovely gold trade. Gold market. Right? So it's going up, going down, higher highs, higher lows, lower highs, etc. Right? That we have learned before. Now we want to enter trades. But we need to know our risk management. Okay? Now, if you go into your TradingView, you will see that I have created my own little favorite bar. So I have a short position, long position, right? So for example, if we wanted to enter a trade over here, okay, we would have to have some risk management before we enter that trade, not after, because we sometimes do it after, right? But before we think about this, we think, where am I going to enter? Where am I going to exit? And where is my stop loss going to be? All right, so let us say we entered for a long position that's going up, right? Because it does go up. Okay, so we take the short position or long position, short position or long position, long position, right? So we click on the long position. Say we wanted to, okay, we've seen it pull up, pull down, pull up, pull down, and we have now got a confirmation where it broke above and made a change of character, right? So now we want to go back and think, where do we think it's going to retrace so that we can enter the trade? So we have this big bullish move. Now obviously there is spaces where we can enter the trade. So when you automatically click on the long position, it gives you automatically a 1-to-1 risk to reward. Now that means basically for every one trade you take, if you lose, you lose 100% of your money. If you win 100%. So it's 100%, 100%. Okay? Or 50%, 50%, or 25%, 25%. But now we want to lower that risk. Okay? And we want to, when we want to make money, we want to make it as much as we can. But we don't want to be greedy, right? We don't want to let it, we don't want to have, for example, we enter a trade and we don't have a take profit, boom. We just have a stop loss, okay? We don't want that, right? And we also don't want to have, we don't want to have a trade where we have this going on. What is this? Yeah? When we have a stop loss over here and our take profit is like that. So if we win, we get what? We get a risk to reward of 0.42. 0.42. So we're not even making 1. We're just making 40%. Okay? If we lose. If it hits here, boom. We've lost more than we could have earned. Right? We have lost more than we could have earned. And we don't want that, right? We don't want that. Okay? So what we got to try and do is, where is a good place to put our stop loss? Because we can't just put it anywhere, right? Normally, most people say, put it at the previous low. So if we're entering here, right? Over here on this candle, okay? Because we think it came back. We enter here, okay? Now, we put it at the previous low. It could be safe. It might not be. But as we are looking at a higher time frame, it is safer. But if, for example, we went down to a 5 minute, right? And we went to 5 minutes and we came back to where we entered, right? For example, say we entered over here, but the last low was over here. Okay, there could have been a chance that we got stopped out. We also don't want to have a tight stop loss. Okay, because what happened actually, maybe you entered here, maybe you entered on the break, right? And you put your stop loss right over here. What happened? It came back and it would have stopped you out. It would have stopped you right out of your trade, because it knows, the market knows, the big guys know that most retail traders, where do they put their stop loss? At the edge of a lower low. Okay, so what is good to think about is maybe that a better place to enter trades, because where people think that you should put your stop loss, maybe it's a good place to put your entry signal in. All right, so basically what you want to do is, instead of catching the trade while it's still going up, think about where the low was. Okay, so as it broke through here, so this is the line, right? This is where it actually broke through. Okay, completely went back into a bullish cycle and bullish market. So this is where you want to put your line, right? Put it right over here. This is where the actual change of character took place. Okay, all right. This is where the actual full breakout took place. So you want to look here. Okay, so maybe it came down. So then what we want to do is, maybe you want to put an entry signal, a limit order. All right, we'll discuss all these different orders later, over here. Okay, so that when it comes back, taps you in and then goes into your direction. All right, then because we already have a 1 to 2. Some people say this is a good risk to reward, but some people say they need a 1, 2, 3 at least. Boom, right there. All right. So here we learn about risk to reward. For every time you lose 1%, okay, let's just say it's percentage, right? Let's say just percentage. So it's 1% you lose. For every 3% you win. All right, for every 1% you lose, there's 3% that you win. So that is why risk to reward. So say, for example, we have one trade. We have, where is my paintbrush? Where is my drawing? Okay, say we have one trade and we win it. So we win 3%. Boom, boom. Oh no, but trade number 2, we lose. Ding, ding. So we have minus 1%. Okay. Then trade number 3, we lose again. So we have minus 1%. But trade number 4, we win. So we have another 3%. Okay. Trade number 5, we lose. So we minus 1%. Trade number 6, we lose minus 1%. Now, if we look at this, okay, we see this, right? Then what happens? We can see that even though we have lost 1, 2, 3, 4, we have lost 4 trades out of 6. 4 out of 6 trades we lost, right? Okay, so we are still profitable. Why? Because 3 plus 3 is 6. Okay, percent. Then 1, 2, 3, 4 minus 4%. We are still up 2%. Okay, 2%. So that is what we want to see, right? We want to see that we're up a little bit, even if we're up 1%. we're still profitable. Remember, this is a marathon and not a race. This is a marathon and not a race. So that is what the goal is. That is what we're trying to achieve. And this is why it's so important to journal how many we lose and how many we win. Okay, so that is for along. And that's how we place a pre-marketed idea of what trade we are going to take in the markets. We use this. This is not the trade. This is your analysis and your pre-market idea of how much your risk to reward will be. All right, this is how much your risk to reward will be. Because your 3%, okay, depending on how much money you have. All right, so let's just say we only have $100 in our account. Okay, only $100. So for every, yes, it's small, and that's how we should start, not $10,000 or $1 million. We don't have that, right? Okay, we do not have that. Okay, so what do we got to do is we have to then delete this. Okay, so we have 100. So now with this chart, and what we see is, okay, we made how much? So 1% of 100 is how much? 1% is 1, right? Easy peasy, because it's 100 to 1. So we made $2. $2 because it's 2%. So now when you trade again, you have 102. Okay, $102. That is still a profit. And I think a lot of people in the beginning, even though we're seeing all these people that are making so much money, they're like, wow, this person made $2,000 in a day, or this person made $3,000 in a day. And that's what we want, that's what we expect from ourselves, right? That's what we expect that we're going to be doing as well. And that's not the case. You know, we start small steps at a time, because that's the only way to become more disciplined with yourself. Because if you're not disciplined, you're just going to be like, I have $50. Let me trade that $50. For example, let's delete all of this, for example. Let's delete all of this. Okay, let's delete all of this. Go back to this one. Okay, 1, 2, 3. Okay, we'll do it there. 1, 2, 3. Okay, 1, 2, 3. What did we say? Over there. 1, 2, 3. Now let's just say, I have $50 today. Yes, okay. I am going to trade. Yes, my $50. Yeah, I got $50 extra cash from somewhere, or I got $50 somewhere. I'm going to put this in a broker. I'm going to trade 100% of this guy, this $50, right? Then what's going to happen? It might go like this. Bim, 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 and stop you out. Then you don't have any more money to trade. So you have to start again. So it's better to trade in percentage wise and ratio wise, so that if you made that loss, you still have money to trade with, and you still can grow slowly. Yes, it is risky, and yes, sometimes we have to take the risks. But if you do all the steps beforehand, and if you apply the set of rules that you have chosen to be disciplined with. So I'm not taking a trade unless I see, okay, a change of character has been made. The higher time frames are bullish, and I want to go bullish. I want to go for longs. I should go for sells, right? We can see already that it made this change of character, and that it's going to go that way now. Okay, that's why we start with higher time frame analysis. Where is my See when it's, oh yeah, why do I keep doing that? So that's why we start with our higher time frame analysis. So as we can see over here, okay, what do we see over here in our higher time frame analysis? Delete drawings. We have a look. Okay, if we look at this chart, it's going a bit funny, right? But what do we see? We saw that it had a big breakdown. Now it has come back into the Fibonacci ratio. Boom, 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 boom. Tapped into a Fibonacci area, right? Okay, but already over here, it has said that it was going in an uptrend. Now, with the change of character over here, it seems to be going in a downtrend again. It seems to, but we still have to take our rules, take our set of rules. Okay, is the 4 hour, what is the 4 hour doing? Okay, it has now made a change of character, but it is now on also the support line. Okay, so it is in a bit of a block at the moment for the 4 hour, as you can see, right? So now we have done our analysis. Okay, but look, it's still a little bit confusing what direction it will go next. But what is your bias from all the direction that it has been taken? Okay, so maybe here it was a liquidity sweep. Okay, it got out and then it came down again, but it is still not breaking this previous low, and it is not breaking this high yet. So it is still in this area. Okay, so we need to decide where the direction is. So this direction is not good. It's not clear market structure, so we don't know where it is actually going. But let's take another symbol. Let's take USD JPY. Wow. So let us delete all the drawings from last week. Okay, see, we have a nice, see with market structure on USD JPY, we have it nicely. Ish. Sometimes so nice USD JPY. So clean. Okay, so what do we have here? On the 4 hour, it had a nice 4 hour change of character right over here. Okay, then where did it come back to? It came back here, down again. So this is a place or an area, okay, where you could have entered a trade, because it's already done a sideways movement, head and shoulders. It's a bit of a messy head and shoulders, but it's still a head and shoulders pattern to go back up. It came back down and retested. Then break of structure occurred. Sorry, that was a terrible break of structure occurring. Break of structure. Break of structure. Break of structure. This one took a little bit longer, came a bit back, and then break of structure. All right, so these are all the different breaks of structure. Okay, so you can see that clearly we are in an uptrend from here, from this movement. All right, oh, this is not a break of structure. The only time this became a break of structure was when the gap occurred. But it came down and it filled that gap, as it sometimes does, and then it went up. So now we have all these different signs. Yes, we could have written this is a chalk, add text. So we could have written CHOC. If you want, you could even say bullish. Then had this one, we could have said this is a boss break of structure, also bullish if you wanted, bullish. And then you can move down to the lower time frames to then decide when you want to take the trade. Okay, so let's take, and if you want to figure, so sometimes what happens is when you're in the higher time frames, you're like, but where am I on the chart when I'm in the higher time frames? You can create a box within that area. So for example, you have this chalk, right? Then you can create a box within that. Let's take this one, for example. From where the break of structure occurred, okay, until here. Maybe you want to see where did it actually break through, okay, and we can go here, then make it style, not extend to the right, boom, we have a little box, and have visibility, text, style. Maybe you want to have a background, so you can put it in a blue background. Then you can go down into the lower time frame. So now you can go into the 15 minutes and then you find your little box. Okay, so in your little box, you still have that. Okay, so what you could do is you could see how the market moved, right? So you know it's now in a 4-hour bullish cycle. So you could look for different patterns. Again, if you wanted, you could then go back in and look for a 15-minute chalk. So where did the 15-minute chalk take place? Okay, if you want to be a little bit of a longer trader, you would look at the 15-minute. But if you wanted to be a day trader, maybe you wanted to look at the 5 minutes, okay? So maybe now you see, okay, this is the 4-hour box. Then you can go down and you can see, it's going to get more power to break through. And then here is where you could look to get in and enter your trade. Long position. Here seems like a good position because it's where the last low was. And sometimes what does it come back to? It comes back to tap out the low or just miss the low. Yeah, so you could have maybe given it some room. Maybe put it over there. Put this below the box. And taken it for a 1, 2, 3 over there, and your 1, 2, 3 would have hit. Okay, so now you want to actually take the trade. So we want to actually take the trade now. So what do we want to do? So we want to take the trade. Oh, these buttons now. That's embarrassing. I don't do the trades on TradingView, so let me see settings. Price ranges, bid and ask. Into the calendar. Where has it gone? That's so weird. Normally it's underneath here. Oh my goodness, where is it? How embarrassing. Trade. There we go. It's at the top now. Okay, so we're going to click paper trading. We're going to click paper trading. How embarrassing. Sorry, guys. Paper trading. Okay, connect to paper trading. There. That's why it's not at the bottom. Trade. No trade symbols. Okay, DCM, USD, JPY. No tradable symbols. See trading symbols. Okay. Now, because we have something open, we can say we want here. We can click on the plus sign and we can say buy 1K. Tradable symbols. Why is it not tradable? Maybe I have to find a different one. USD JPY. Like this. Okay, so a new one. And I now trade it. Okay, so we were gonna trade from here, right? I remember we were gonna trade from here. It's been such a long time since I've used this one. Alright, so we got 1, 2, 3, for example. So we go in here, we go click, buy. You can't trade the symbol within the competition. Am I still in the competition? I'm still in the competition. I don't want to be in the competition. Okay, so now, since I'm still in the competition, which I don't know about, this is very weird. Okay, you would click here. This is very annoying. Within the competition, you can't trade this symbol. Okay. Competition am I in? What is trading journal? Let's do an account name, okay? New trading AC. Okay, new trading AC. Okay, now let's start off with something that we all have. $100. Okay, then risk, stocks, futures, forex. Okay, then create. There we go. Okay, paper trading. Now let us try. Sorry about that. Alright, so now we go here. We just want to enter a trade over here. So buy. So you see, we have 1,000. We could, obviously we could take it down. Yeah, so let's say not 1,000. Yeah, it's a mini lot, okay? Then we want to have our stop loss over here. See, $2. Okay, and then we want to have our take profit over here to $5. Okay, so we have that. We want to lose. If we lose, we only lose $1.5, and if we win $6. Okay, that is how you enter the trade on TradingView. But that would be, you could make it a limit order or a stop order. Okay, so now let us discuss the different orders. I hope I've made sense and you are slowly getting with me. If you have any questions and not so sure, just let me know. Alright, so now let us talk about the different trading entries. Okay, so there are different trading entries. Let us talk about those. Okay, let us go up. Let's go to the side. What is this? Why do I have this? Yeah, okay, let me get this. Let's delete that. Alright, so now we're going to discuss the different trading orders. Okay, text. So, different trading entries. Okay, number one, we have a market order. Okay, that is you buy or sell straight away, and you don't need to wait. But this sometimes can cost you, because more likely than not, this is where we can fall into a habit. Habit of chasing trades. Okay? And yes, we see a lot of people who are on YouTube and are trading. What do? They say go for the market order. But from my experience, my personal experience, that's all I'm saying. This is what I've experienced. When I do market trades, I feel emotionally I'm not ready for the trade. Then I feel like I'm chasing the trade because the analysis was done super fast, and then boom, I want to take the trade automatically. Okay? That is what happens when market trades sometimes happen. If you are confident enough to take a market trade, go ahead. But what I have experienced, this is my personal experience, is when we go and take market trades, what happens is we actually are just chasing trades. We are not actually doing the right analysis, sticking to our rules, and taking the trade on the fundamentals that we have decided on. And more likely because, it's at a good price, let's go. Okay? And then we jump into the trade. 5 seconds later, you get stopped out. And the scary part is that sometimes it works. And because it works, we fall into this habit of it's going to work all the time. And guess what? It doesn't work all the time. All right, that is market order. Next is number 2. Let's make it space. Number 2 are limit orders. Okay, what are you writing? My goodness me. Limit orders. Okay, now with limit orders, this is where you buy or sell at a specific point of entry. Okay, specific points of entry. So what does that mean? Maybe we have our line. Let's say our line is at, okay, we have our line, boom. Now where's this line at? Our line is at 159,240. 159,240. That's where I want to take my trade. So when it comes to this area, okay, when it bounces off this area, boom, it enters me into the trade. Okay, when it bounces in that area, that's only when it enters my trade. Okay, so that would be a limit buy order. Limit buy order. Okay, now for example, we have also limit sell areas, but it's just in the opposite direction. So for example, let's take another line. We have now, boom, it straight. Whew. We have 159.223.223. All right. This would be, there we go. All right, then, for example, now we have, it goes back up to this area, and then it comes down. Let's change that into red. So we know that this is now our limit sell order. So these are what you call limit orders. Okay, then number 3, you have stop orders. These are orders that when they go through the number, they go through the entry, that is when your order will be placed. So for example, now another line coming out is, for example, we have boom. Okay, so we have the 159.137. $159.37. Now what happens here is, if you want to go for a long or buy order, what happens here is there is no going back down. It just goes through and then taps you in. So when it goes through here, boom, and crosses this line, okay, it crosses this line, that is when the order goes through, okay, for a buy. Now that is called a buy stop order. Buy stop order. Now on the opposite, when you want to go for a sell, it goes through here. Okay, forgot the price, right? Text, what is the price? The price is 159.122. 159.22. 159.22. So this is a buy stop order? No, this is a sell stop order. This is a sell stop order. So how does this work? Is when the price goes through, that's when it will pull you in. So those are the 3 different types of entries and the basic types of entries that one would go and use. Is this not? So you see here, these are the, there we go, the different types of entries. So you have the there we go. So these are the different types of entries. You have the market order, the limit orders, and stop orders. Alright, so those are the main points for risk management and entering trades. Okay, so let's see if we can use those different orders on the trade. Okay, so now let us see. Just for quality purposes, this is a 15-minute, right? Let's see how does it react over here. What do you think it's going to be, guys? What do you think it's going to be? Is it going to be a sell or a buy? Let us know in the chat. Is it going to be a buy or a sell? Let's place some, just for example purposes only. Market order would be sell. That's a market order. Okay. Stop loss over here. Wait. Yeah, there we go. So here we have the side panel. That's how we do it properly, guys. Okay, so we have here sell or buy. So maybe we are going to order, market, limit, or stop. All of these options are there, right? So we have a market order. Maybe let's say we sell, boom, automatically in the trade. Okay, already done. Now let's say we have our stop loss over there. We need our take profit, at least a 1, 2, 3, right? So 396 would be over here. Okay, that is a market order. Got it? That's a market order. In, right? again, chase the trade, right? Then do the full analysis, but maybe we may make some profit, right? We'll just let the market order sit for a bit. Remember, I'm only doing paper trading. It's not real money, just being transparent. And again, a reminder, all the advice I give on the stream, not financial advice. Please seek more financial advice. All right? Okay. Only use paper trading. Okay, so that is a market order. Let us close that for now, because I'm just giving examples. Market order, close position. Okay, now for example, maybe we think it's going to sell. All right, but now we want to have an order, we want to have a limit order, but we want to have a limit order over here. Okay, so you want to have your stop loss over here and your take profit over here. Yeah, so now that is in the area where you want to sell. That would be a limit order, a limit sell order, right? Because we are selling the market, not buying the market. Okay, then after that we have our stop orders. So we want to stop sell. So we want to have our sell over here. Maybe when it reaches this point we want to sell, so we want to take profit over here, and we want our stop loss over here. Yeah, it's a bit of a one-to-one, so we would want to have it bigger. Okay, so those are the different orders. Okay, so as you can see, we have discussed risk management, different types of orders, and how you create them on TradingView. I hope you enjoyed this evening. Again, if you find it interesting, tune in again next week for our Trading Financial Fridays. All right, so that is it for today. See you guys in the next one. Take care and God bless. Bye.